Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Avinash Gorakhshekar of Joint Capital Services, along with Vidit Bolinchkar of Ventura Securities and T.S. Hariyar of HRVB Client Solution. On the show today, we talk about the impact that L&T has along and what will happen as far as them meeting the growth guidance is concerned. We talk about why Aditya Birla Capital is up almost 22% in the last three sessions. We discuss what's the rally really about on the company. Jeevan Small Finance Bank will be coming out with an IPO. We discuss what impact that will have on the holding company. And finally, we discuss a top stock pick from our guest. Nifty is trading at record highs. We talk about either it could be a large cap or a mid cap, but one stocks that they have told their clients to start accumulating. So those are the stocks that we would want to discuss. First stock, L&T, it's down almost as 13% from the recent highs. It's been underperforming the Nifty, given the fact that there are a lot of notes and analysis in terms of whether it will be actually be able to meet the FY20 guidance. They've just from the start of the third quarter, they've just managed to back 3 orders totaling anywhere between 9 to 12,000 crores. So that's not very encouraging, which means in the fourth quarter they will have to do more than a lakh crore of orders to meet the order inflow guidance. Hari, I'll start with you. What's your sense on L&T? It's been falling ever since the numbers came out. The commentary in the second quarter was also not very encouraging. Do you think that the economic slowdown and the current state of the state elections and everything will have an impact on L&T?
I think the slowdown in government spending seems to hit in L&T quite a bit, and the correction that we saw was largely after Credit Suisse downgraded the target of Larsen & Toubro by about 16%. I think that was probably the trigger, but I think the real story has been happening for quite some time. The problems were quite a few. What the L&T management themselves have admitted is that the flow of government orders, both central and state, which used to be a kind of a mainstay for Larsen & Toubro, I think that has been very, very gradually slowing, and it's actually picking up momentum. The slowdown is picking up momentum in the last couple of quarters. So I think that is a big worry as far as L&T is concerned. Even if you look at the first half, that is the March quarter and the September quarter put together, I think it has largely been driven by hydrocarbon. I think most of the hydrocarbon orders seem to be kind of peaked out, and then there has been a bit of power orders. Now, L&T actually gets a chunk of its orders from the government, and I think that is where the real slowdown is happening. So international orders, probably they may continue at the current levels, but I think the domestic orders are where the problem is. So we are a little cautious. I think the stock has had a run up. Probably at these levels, I think most of the news seems to be the price.
Okay, that's the view that's coming in. But what's your sense on the order inflow? Will they be able to meet the guidance, or you think it's a tough task for them?
I think it's tough because they're not really reduced their guidance substantially. And if the government orders slow, and what we understand is that the next 2 or 3 quarters could be very slow in terms of government orders. So I don't think that's good news for Larsen & Toubro.
Okay, that's the view that's coming in on L&T. What's your sense, Avinash? How do you look at L&T?
My guess is, Darshan, I think the 20% guidance is quite difficult to achieve, and considering the fact that Hari mentioned rightly that the bulk of the business comes from government orders, and I think we could see a little bit of pressure coming in on their working capital. In fact, in the Q2 management commentary, I think working capital was one highlighting factor where they mentioned that they are making conscious efforts to reduce it. But I think if order inflows don't come in, and obviously on the existing projects there's a slower kind of a run rate, then I think you're going to see lot of working capital constraints for L&T, at least for the next 1 or 2 quarters. And I think clearly until we don't see some macro variables improving significantly, I think L&T could possibly just remain sideways. So I would believe that although a large part of the negativity looks discounted in the price, from an earnings perspective, I think the third and fourth quarter could be slightly below what the market expects.
Okay, and what's your sense on this industry as such? Do you believe when L&T itself, the leader, is seeing a lot of stress, do you think that it will take time for the industrial, for the capital good, for the infrastructure stocks to be take time to come up?
Yeah, I think obviously L&T being a front runner here, and I think it gives a fair amount of idea of what's happening on the industrial growth side. So I would believe that we could be yet seeing some challenging time, at least for the next 3 to 6 months. I think unless we see some real hardcore numbers coming out on the corporate capex side, then only I think one could get a better assurance on the order book inflow as well as the kind of 20% guidance which these guys have given out.
Okay, and Nate, what's your sense on L&T? What should one do?
So I think if you look at the EV by EBITDA multiples of L&T, they're at their cycle peaks. 16.5 is typically from where the stock has kind of corrected. So high valuations, slowing order book, and increasing net working capital. So we have seen it come down to 18-19% of revenue. Now it's up about 20, and with two states contributing significantly to their order book, and projects which are priority projects which could come on hold, then you might see the order book also kind of slow down. In that case, I think that this stock needs to be sold into right now. So any pullback rally is a opportunity to sell.
Okay, that's the view that's coming in on L&T. Let's address some of the flashes that have come in from Bloomberg. Ambani said to sell Network 18, and he's speaking to the Times Group to sell it. Initially, they were in talks with Sony also. We'll try to get the Bloomberg guys who did the story to speak more about what this means. So we'll wait for them to come. But in the meanwhile, we'll continue with hot money. AB Capital is the another stock. While some of the asset management companies like an HDFC AMC as well as RNAM have rallied significantly. One stock which has also done well, but also and AB Capital also has an asset management company under it. But the rally is actually happened. It's up almost 22% in the last 3 months. What's the view ahead on AB Capital? We'll ask our guest. Till now, AB Capital, Avinash, was a massive underperformer, didn't perform. Over the past few months, obviously, the rally has started. What's changed for them, and do you believe that there is more potential in this stock?
I think, Darshan, from a long-term point of view, the kind of businesses they are into, I would believe that they have several growth triggers in their businesses. I think the main reason the re-rating happened was, markets were obviously quite surprised to see how the HDFC AMC stock actually rallied. And now I think people are comparing Reliance Nippon with, again, AB Capital. And I think if you look at the parentage of this company, I think they have handled the entire liquidity crunch fairly comfortably. And I think if you look at the insurance business, the housing finance business, as well as the wealth and the broking business, I would believe that these are also obviously value parts in the entire chain. And from a long-term point of view, I would believe definitely there could be value. In fact, recently the management, when the stock was not even 100 rupees, they decided to invest further about 2,000 odd crores at 100 rupees. So that also gave an additional kicker to the stock, assuming that the management was pretty confident on this business as a whole. So I think from a 2-year perspective, I think definitely one could look at investing in the stock, and of course look at it from a long-term point of view, because in the short term, there has been significant underperformance right from the time it got listed.
Okay, that's the view that's coming in. What's your view on this, Vinith, AB Capital?
So we don't track the stock, but I can give a qualitative aspect is that the lending book is quality is deteriorating slightly. In the affordable housing space, they're doing pretty well, and the other alternate businesses like insurance, broking, and asset management are doing relatively well. So I think there could be marginal upside from these levels, but beyond that, I don't think there is too much of traction remaining.
But what caused the rally? Do you think it was because of the rally on the asset management companies?
Yeah, so there's a massive re-rating that is happening in the, so the insurance business, VNB is also turning around.
Okay.
So that's leading credence to the fact that your businesses are firing up, And, as we see more slowdown coming, I think the AMC book, which has been soft so far, could see some kind of pickup also happening. So, I think these are the factors that are leading.
Anything on the asset managers that you recommended to your client, RNAM or HDFC AMC?
So we initiated RNAM at about 265. So we are up reasonable amount, and we continue to remain hold on that. I think that this sector will go through a massive rating. We are going to have a 10 to 15 year kind of runway ahead for them without much ado. And you don't need any incremental expenses. So all the fees that you generate go to your bottom line. So, the operating leverage will continue.
Okay, Avinash, before I go to Hari, what's your sense on the asset management companies? Is that something, a trigger that you would look at? Do you like this sector, and is AB Capital something that you would consider as an investment in this sector?
From a 2 to 3 year perspective, Darshan, AMC business will continue to grow. I think the kind of awareness with investors and the kind of financial inclusion which is happening, I think mutual funds as a product are going to grow significantly over the next 3 to 5 years. So I think in that perspective, it's going to be a close guarded club with only the larger players surviving. And within that pocket, I think Reliance, Nippon, and typically AB Capital, I think these are companies where one could definitely expect a decent risk reward. HDFC AMC obviously should do extremely well, but at these valuations, Darshan, I would not prefer to actually enter at these levels.
Okay, that's the view. And Hari, what's your sense on AB Capital?
See, we like the stock. I think there is a very strong insurance franchise, there is a strong AMC franchise. And let's not forget there is the entire NBFC crisis that we saw in the last 1.5 years. This is probably one stock other than Bajaj Finance which actually came out, I would say, unscathed. Not too many write-offs, not too much of losses, not too much increase in gross NPS. So I think overall this is a company that managed to hold its margins, and I think that has probably worked in favor of them. With the kind of valuations that HDFC AMC is getting right now, and I agree with Avinash that even I don't agree with the kind of valuations they get, but that's a reality, and I think there is definitely a re-rating that's happening in AB Capital. So if you're looking at the next 2 or 3 years, I think this definitely seems to be one of the NBFCs other than Bajaj Finance, which looks good, but still available at a fairly reasonable valuation.
It has multiple businesses. What businesses are you betting on that probably will grow? And because it's been a massive laggard, at least ever since it listed, it hasn't done well ever since it came out of AB Nuvo and Grasim and all. So that time it didn't do well, but it's picked up of late. What businesses are you betting on here?
So we like all the three. We like insurance, we like asset management, and we also like the financing business, because I think if you look at insurance and asset management, have been two segments that have done extremely well in the stock market. Look at the life insurers, look at the asset management companies. So I think while valuations will be stretched today, I don't think that kind of a valuation is reflected in the price of AB Capital. So I think that is the good point. And NBFC, I think the markets are gravitating towards the NBFCs which are able to come through the crisis unscathed. So that is where a Bajaj Finance or probably a AB Capital, I think, hold the advantage. So we like all the three key businesses that AB Capital is into.
Okay, that's the view that's coming in on the counter. Let's move on to a Bloomberg exclusive. Billionaire Mukesh Ambani is in talks to sell his news media assets to India's Times Group as Asia's richest man plans to unload a business that's been losing money. PR Sanjay, who's part of the team of reporters that broke the story, joins us with more details. Sanjay, what's the sense? A few days ago, you had also said that Sony was in the race. Which part of, there are two listed entities, obviously, which Mukesh Ambani has, is TV18, Network 18. Which part of it is he looking to sell, and how far in terms of negotiation are they?
This is actually, the second part of the story. So, Asia's richest man, Mukesh Ambani, is indeed looking at selling its stake in Network 18. So, Sony is interested in the entertainment side of business. So, they have already started talking to Network 18, and the due diligence has already begun. And now, BCCL and a few others are looking at the news side of it. So, the stock is at very nascent stage. They have started, appointing. They're looking at appointing investment bankers for this. They have also readying due diligence to look at the valuation on the other side of business, including various relevance of competition, commission, etc. They are seeking advice from investment bankers and going to indulge in due diligence for this one. This is very, very preliminary stages, and parallelly, as I told you, Sony's getting into advanced stages of discussion for entertainment business. So entertainment business, the suitor is Sony, potential suitor is Sony at this point of time, and the news business, BCCL is the Times Group is looking at it, and there could be more suitors coming in the future.
Okay, Sanjay, we leave it at that, and we expect that once more details comes in, you'll join us again with all the details that's come out. So pull up the stock prices of Network 18 and TV 18. Basically, the story referred to Network 18. It's up almost 8%. Pull up TV 18 and let's see. Network 18 basically has a lot of news channels. So there is traction here. So Sony and now Times Group, so it could be divided there. Let's move on with hot money. The next stock we want to discuss is Jeevan. Now, the stock has done extremely well. Initially, there were a lot of concerns in terms of how much the holding company discount will be there, wherein a lot of brokerages indicated that Ujjivan is something that they are negative on. Now, finally, Ujjivan Small Finance Bank has spoken about its IPO. The price detail is out, the valuation is out, and Ujjivan has actually rallied significantly. What does this IPO mean for Ujjivan? That's something we want to talk about. And what is the view of Ujjivan once this IPO comes out? Will it be a holding company which probably will underperform, or is it a stock that you should accumulate? Vineet, I'll start with you. Firstly, let's talk about Ujjivan Small Finance Bank. What does this IPO mean for Ujjivan as such?
Yeah, so we need to look at how the IPO is priced. So we've got a book which has grown from 10,000 crores in FY19 to half yearly at to 12,500. So the company is growing very well. So they're doing a 40-50% kind of growth. Asset quality is under check right now, as of now. And if you see post issue all the details, and if you see the grey market premium, we're looking at the stock probably listing between 50 to 53 rupees. Okay, that gives you a market cap of about 8,000 crores.
Okay.
And in a 8,000 crore market cap, we are not including the 25% ESOP that shares which are yet to be listed because the details are unknown. So on this basis, whatever is the calculation that we have done, the book value works out to about 3 times, a little more than 3 times. And if you give a holding company discount of 30% to this, you'll still get a 40% upside from the current price of Ujjivan on this stock.
Okay.
So I think there is a reasonable margin of safety, and I think that this stock can rally further.
So you're saying that despite even after a 30% discount or using a holding company discount, the stock can still rally 30-40%.
So because see, as we said, if the listing is around 8,000 crore market cap, you're getting 5,600 crores after holding company discount, and 4,000 crores is the current market cap of the company. So you're getting around a 1,600 crore kind of a valuation gap, which could be a possible appreciation.
Okay, if you've studied or seen more of the Ujjivan Small Finance Bank, would you recommend investors to invest in this? What's your sense on that part of the business?
So I think that the book is growing very fast. They'll have a capital adequacy of about 30 times, 30% after the IPO. And given the fact like last year they do at 44%, they have a NIM of about 8. So I think, and asset quality is under control. So I think this business can grow fast.
Okay, that's your view. What's your sense, Hari? Firstly, let's talk about Ujjivan. What does the IPO mean for Ujjivan?
See, one concern we've always had, and we've been expressing that even in the past, is that once the listing happens, then you could have Ujjivan kind of becoming a holding company, though we need to finally look at the structure and the holding company discount coming in. So I agree with Vineet that even if you consider that, there seems to be some kind of an upside. We also have concerns about the macro structure of the the small lending businesses as such. See, there are 2 things that are happening. On the one side, we are having the RBI, which is trying to get tighten the screws on most of these people. We have got cooperative banks, we have got the small finance companies, the small finance banks, and the RBI is trying to tighten its hold on all of them because they believe that there is a lot of an informal banking system that has already started in India. So I think they are tightening the screws on all of them. At the other side, there are these P2P lending platforms that are emerging, and I think today they are worth about close to about 2,000 to 3,000 crores, but it's expected that it will grow to about 25,000 to 30,000 crores over the next 2 or 3 years. Now, if that happens, that could be a genuine competition as far as these people like Ujjivan are concerned. Now, let's not forget that P2P is already regulated by RBI, so it's not an unregulated growth. So we have a regulated growth coming there, and the returns are much higher, and you have something that is much simpler online. So, if the competition comes from that side and RBI regulation on the top, it's going to be a fairly tight squeeze as far as most of these small finance banks are concerned. So, despite the discount, I would probably stay off these kind of stocks.
What's your sense on Ujjivan Small Finance Bank? Is that something, I don't know whether you've seen the prospectus or any notes on this, but is that something that, if not on the holding company issues that you have, can someone invest in the Small Finance Bank?
Yes, I think one advantage, in fact, given a choice between Ujjivan and Ujjivan Small Finance Bank, we would rather prefer Ujjivan Small Finance Bank for the simple reason that they have the core business with them, unlike Ujjivan, which only has the holding company status now. So we would still prefer to buy a Ujjivan Small Finance Bank. But having said that, our concerns on the small finance business still remain.
Okay, and your sense, Avinash, firstly, what does this IPO mean for the listed entity Ujjivan?
No, I think from a regulated point of view, I think the IPO was a requirement what RBI mentioned, but I think clearly as a holding company, as Hari pointed out, I think the bigger opportunity would be basically to actually directly play on the Ujjivan Small Finance Bank IPO. Our sense is that if you look at other players like AU Finance or maybe Credit Access or other players, valuations compared to all these players, I think obviously the price looks attractive from a long-term point of view, and the management has mentioned that they want to address the mass market. Asset quality has been decent, growth has been pretty good. So I would believe that the IPO gives a fair amount of opportunity for new investors to actually make good money on the table immediately on listing, and obviously over the next 2 years this could gain scale and size. So I would believe that it's better to bet on the Small Finance Bank IPO, and for the time being put a hold on Ujjivan.
You feel valuations are attractive what they're offering for the Small Small Finance Bank?
I think so, because if you look at all the other players compared to AU Small Finance or a Credit Access, I would believe that Darshan, this definitely could get a decent kind of response. And once the listing happens, I think probably markets could get a sense as to where the valuation gap is.
Okay, that's the view that's coming in on Jeevan. And finally, since the Nifty is at record highs, Reliance hitting the 10 lakh crore market cap. So there is, at least on the large cap front, there is a lot of euphoria. Can't say the same for some of the mid caps and small caps. No counters like India Bulls and Yes Bank and some of the banking stocks have rallied. But we're asking our guest one stock they believe they've told their clients to start accumulating as the market moves to new highs. Hari, I'll start with you. Which is one stock that you've told your clients recently to start buying?
I'll start with a broad macro view. We like metals, and I think metals finally appear to be poised after a very sharp correction in the last couple of years to probably gather steam from these levels. And if you look at within the metal space, we are leaving out steel for the time being, but we like most of the mineral companies a lot. So we like stocks like Vedanta, we like Hindalco, and Hindalco is our topic at this point of time. I think a lot of the issues that they had in the past with the Novelis and other things, they're gradually getting over it. Number two, I think we expect that by Jan, we should have a trade deal in place. And if that happens, we could see a series of China stimulus coming in. And the big beneficiaries could be the mineral stocks across the world. So we like Hindalco. I think the stock has corrected sharply from the peak levels, available at good valuations. And I think at these prices, the downside risk seems to be limited. So we are largely betting on a trade deal happening somewhere in early Jan. And I think in anticipation, we could see a lot of Chinese stimulus coming in. So Hindalco would be a top pick at this point of time.
Are you betting on the LRS deal going through? Because there seems to be a bit of concern whether it'll go, it won't go. But what's your sense on that?
We would rather prefer it doesn't go through, because I think in terms of value accretion for Hindalco, I think it would be still better that Novelis is not able to buy LRS rather than they buy LRS, because I think it'll create a kind of a situation where the ROE will go down substantially with the company. So we would actually prefer that the deal doesn't go through.
Okay, what's your sense, Avinash? Which is one stock that you've told your clients recently?
In fact, Darshan, we like the gold financing space, and within that, we have been recommending Muthoot Finance earlier also. Our sense is that the first half was not all that great on the AUM growth front, largely because of some funding constraints. But I think the management has clearly pointed out that funding has been arranged, and now the second half should be much stronger than the first half. In fact, they have guided for a 15% AUM growth, and more importantly, the kind of business they operate, there are very few companies which come to the scale and reach of Muthoot. And recently, they acquired the mutual fund business of IDBI. So I would believe that longer term, at least from the next 12 to 18 months, any level below say 670, 680 could be a good value kind of buy, and one should look at a 2-year horizon. These companies definitely are very profitable companies with NIMs of almost 15-16 odd %. So probably this could be a good opportunity, and we have been telling our clients to accumulate the stock slowly on every decline.
And what's your sense, Vineet? Which is the stock that you've told your clients?
So we stick to large caps, and we have discussed SBI before, and we still believe that there is a large value unlocking to be happening from the listing of subsidiaries. So we have the SBI cards coming. It's a unique business. This is going to be followed by investments in SBI capital markets, and over the next couple of years we could see the AMC business get listed. So even if you take very conservative valuations of the subsidiaries, and if you look at the prominent business, it's a 23 lakh crore kind of AUM book, which even in a worst case scenario growing at 7-8% could become a 30 lakh crore book in the next 3 years. And we believe that the cycle has peaked in terms of NPAs, because 85% has been provided for. So we are sitting at 3 times asset quality. NPAs could come down to 2.2 in the next couple of years. And given the improving asset quality, write-backs, receivables going up, and growth in book, I think this bank could see substantial upside from these current levels.
Okay, how do you play SBI cards? Is that have you studied the IPO?
No, I haven't had a chance to look at it, but I think playing it through SBI is also decent.
I think one of the things that when SBI has rallied is because the valuation that has come out in terms of what the management has said is much more than what the SOTP valuation that analysts have said. You think that most of the upside is captured in SBI for SBI cards?
No. There could be a little more, 5-7% kind of up moving out.
Okay, so that's the view that's coming in on the counters. So SBI is one of the stocks that's been spoken about. Hindalco, the gold financing companies is something that's been spoken about. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guest, Vineet, Avinash, as well as Hariyar. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.